All right, great people, NYB community. Great to have you back with us for yet another episode of the Minding Your Business podcast. Entrepreneurship, real estate, trending news. There's still no business like minding your own. I'm your host, Ron Brooks. Some of you still know me as Champ Ron. Which is quite all right. And we're here again, another great and dynamic episode, man, of the podcast. Subscribe to the podcast, 5-star, wherever you get your pods. That helps me to continue to grow this dynamic community. I appreciate all of you who have been rocking with me. Many of you have been rocking with me this entire time, man, since 2017 when I started this particular podcast. And it never goes without saying that I appreciate all of you, all your feedback, all your guest recommendations, all your thoughts on the topics, and the great folks that that we have as guests on this podcast have had over the years. I really, really do appreciate it. Make sure you tap in with me. One of the best ways you could do that, champ10k.com, which is CHAMP 10, the letter K.com. That's where I have a lot of my resources, a lot of my contact information is all housed there. Don't forget us at River City Capital. For those of you that are in the greater Memphis, Tennessee area, we have loan funding available for small business owners that serve in disinvested and underserved communities. And so we'd love nothing other than to have you go to rivercitycapital.org and check us out. And if we resonate with you, reach out to us. And we'd love to be able to fund your dreams or kind of your next endeavor. Boy, a lot going on since the last time I was here, I tell you. Unfortunately, there have been several mass shootings that have taken place. Inflation's on the rise, and there's still issues with Russia. Some of you are still waiting on the White House to do something about your student loan. All kinds of different stuff going on. So I figured I'd just make this a doom and gloom podcast. And for an hour, I'll just tell you about all the problems we got and how everything's going to hell. No, I'm kidding. Right. So we're going to have actually a very great conversation today. I'm excited about a great gentleman that I had a chance to connect with several years ago. Actually, if you guys can remember what life was like without wearing masks and without COVID-19 shots and booster shots and all that, there was a life before that. Right. And during that life, I had a chance to meet our guest today. We connected, and he was very gracious to reach out to me. We had not met face to face at that time, but we were able to connect and kind of in some similar spaces, and they got a chance to be face to face, him and his great team, actually in South Dakota at a banking conference there. And been able to keep up and kind of see the growth of not only himself but his organization and the reach that they're having in partnering with the banking industry to advance areas in fair lending. And so Tory Haggerty is our guest today. He's the president and founder of Tuscan Club and the Tuscan Club University. And so we are excited to have him. We're going to talk today about his background. We're going to talk about Tuscan Club. We're going to talk about banking and fair lending. And we're going to talk about his book as he's an author now, which is an awesome thing to see. So I'd like to encourage you all when we get to that point. That link will be in the show notes, and I want you all to go in and pick up a copy of the book. And so with that, Tory, man, I appreciate you joining us today, man. This is awesome.
Yeah, thanks for having me. It's been, it's like I said, it's been a couple years, and I love how you mentioned that. You kind of think about it. Back when we used to meet in person, it seems like it was so long ago. It feels like 2019 was 20 years ago at this point. But yeah, it's
Right.
great to see you again. I'm happy to be here. I'm happy to talk about the topic and a couple other things today too. So.
Yeah, absolutely. And so we want to get into that, and we definitely want to get into the book Unfair Lending because I want to get my copy, and I want to encourage everybody to get their copy as well. But before we get there, Tory, man, for those that aren't familiar with you, kind of share your journey, to getting to where you are today in being in a very important space. That many people I think aren't quite aware of, that people that aren't in the banking industry aren't quite aware of. So we want to demystify some of that, but share with us kind of your background and how you got to where you are, man.
Yeah. So you had mentioned, South Dakota is where we met. That's where I grew up. For those of you that don't know, yes, there are two Dakotas still, until they combine us. But yeah, I grew up in a little small town, South Dakota. My background, I've always been curious about stuff. I was that kid that would tear electronics apart and see how they worked. And I loved electronics. So when I joined the Air Force at 18, I was like, man, I want to learn electronics. And after 7 months of learning electronics, you know what I learned? I
What's
hate
that?
electronics. I'm like,
Of
okay, let's
course.
do something else. And then I go to college and I study media production, right? So I was in radio for years, and I'm getting ready to graduate. I'm like, I'm not going to make any money doing this, and I don't need a degree to do this, so I need to do something else. So I literally went to a graduate school fair and I looked around the room and I said, oh, business. I'll do an MBA. That sounds good. And that was it. That was literally the extent of me thinking about it. I went to business school, took a banking class, learned about the federal regulators, and they said, yeah, the FDIC and the OCC, the federal regulatory agencies, they're great jobs. It's a great organization to work for. So I applied, and 9 months later, I get an interview and got hired on with the FDIC. So that's how I started my banking
Wow.
career as a federal examiner. And I did that for 6 years. And I got to go through many schools as I learned to be an examiner, and it's a long process. Several years to get commissioned. And one of the schools I got to go through was the Fair Lending School, as a regulatory school, and I thought, man, this is awesome. This is great training, but it's
Yeah.
not offered to everybody. It's only offered if you're an examiner. So then you fast forward, and I go to work for a couple banks, and I realize, well, I kind of suck as a banker. I don't like wearing suits, and I just didn't feel like I could have an impact. Right. And, I kind of, like I said, I've always had a curious mindset. I wanted to learn new things, and I wanted to, take risks. And I don't think that necessarily makes me special. That, this is a big risk, and there's no clients lined up, and there's no money coming through the door, but let's just try this. And after several years, we kicked it off, and, the rest is history. And we've done a lot of fair lending audits along the way. And it was about a year and a half into doing fair lending audits. And I looked around the industry and I'm like, why is nobody teaching fair lending? Why is there no fair lending school? There's all these certifications. There's all these compliance courses to teach banks how to do things right, but there's no fair lending school. And then I realized, I'm like, well, nobody's really taken the time to develop it. So I had years of experience, and I thought, why not? So I literally spent a year of my life. I wrote a 300-page manual that I got right here. This is literally the culmination of it. And there's videos online in school too. But I wrote this manual. We spent 3 days filming the videos, 3 months editing it. And then we created a certification course. And that's really what launched us on the nationwide stage for fair lending, is our fair lending school. Well, then fast forward even further, I'm still doing fair lending audits, speaking engagements. And I go to a leadership convention in Florida in November, and it's a Ramsey convention. I don't know if you've ever been to any of those, entre leadership. And I'm sitting there. I'm one of the first one in this room of 900 people in the morning, and nobody's around me. I haven't had my coffee yet. And this guy comes down and he comes up right to me. He's like, hey, Tory. I'm like, hi. He's like, hey, my name is such and such. Jeremy. And I'm like, okay. He said, where are you from? Because we're in Florida now. And he said, where are you from, Tory? And I said, South Dakota. Where at? Sioux Falls. Me too. And I'm like, all right, I'm getting punked or something here, because how is this?
Wow.
Anyway, he was a book publisher, and I told him about this school, and he said, Tory, you need to write a book on this. And that's where it all ends up here today. But yeah, just a curious mindset, wanting to learn stuff, and look where things take you if you have the initiative to do it, I guess.
Yeah, no, absolutely. No, it's a tremendous story. And, as you transitioned, Tory, out of the Air Force, what did that look like for you? I mean, after serving the country in the manner that you did, was that scary, kind of coming out of the Air Force? And now, as you got into
yes and no.
Your career? And
yeah, people that serve 20 years active duty have the hardest time, because that's all they've ever known. And the military is very structured. It's, rank heavy. It's yes, sir, no, sir, yes, ma'am, no, ma'am. There's all these things. And then, of course, you do a lot of crazy stuff in the military that you don't do in civilian life. I did 4 years. I knew the whole time when I joined, I'm getting out and I'm going to college, right? Now, 5 months after I left active duty, I did join the South Dakota Air National Guard, and I continued to serve, and I did 20 years and then retired. But being in the Air National Guard is about as close to being a civilian as you can and still call yourself in the military. And for those of you in the Air National Guard listening, you know it's true. Don't get mad at me. But anyway, it's not. I mean, we still do all the same missions, still the same commitment and everything, but it's a lot more laid back, and it was a lot more for me. But yeah, I mean, when you leave active duty, it's really scary, but I knew, hey, I'm going to go to college, I'm going to get my degree, and then we'll see where things go. And I've always We are cutting out, Ron. Is that my internet connection or is that your internet connection?
Yeah, you know what? I can't really tell. Yeah, you cut out for maybe about 15 seconds there. So yeah, no, but I got you.
Yep.
I got you now.
Gotcha. Yeah. And I was just saying, I've always tried to do the right things. I've tried to put myself in a position to succeed. And, and I know that hopefully things will work out. And so far they have.
Awesome. Yeah, no, that's awesome. So, with Tuscan Club, where'd the name come from? I don't think I ever asked you that. Where the name came from for the company, and where did you see just those opportunities?
Yeah, one of my old examiner buddies, we're both, neither of us work for the FDIC anymore, but he used to joke. He's like, man, you sound like you own a chain of golf courses in Florida. And I thought, well, that sounds great. So I used to tell that to people when I met them. Oh, Tuscan Club Consulting, what do you guys do? And I say, yeah, we own a chain of golf courses in Florida. And they're like, really? And then I feel bad that, lied to them. I was like, no, that's not it at all. We live on Tuscan Club Circle, so there's nothing really, elaborate about that. But that's how we ended up coming up with the name. When I started the company, I had all these great ideas. Hey, we should do this name, and all of a sudden, my wife starts Googling taken, and so we just ended up with this.
There you go. No, I love that. No, that's awesome, man. And so, let's talk about a little bit about fair lending. What is it? And for someone that's, kind of your typical bank consumer, just kind of has a bank account, maybe a loan at the bank, and they've never really heard of that term. What is it, and why is that something that the average person should be aware of?
Sure. So fair lending is basically a lending institution. So let me define that. A lending institution is someone who makes loans, right? Usually banks, it can be credit unions, it could be a mortgage company, right? So it's an organization that makes loans. So I'm going to use the term bank generically. So a bank makes loans to customers or consumers, to people, and they have to do it fairly, right? So there's really not a fair lending law. There's no law that says you have to do this. But there are laws and regulations that kind of have what I like to call fair lending flavor. The biggest one, the Equal Credit Opportunity Act, and basically it says you cannot discriminate as a bank based on somebody's race, color, religion, sex, or national origin. Now, there's other ones as well, but those are the main 5. And banks need to make sure that they are treating applicants fairly and that they are not discriminating based on one of those factors. Well, how do banks do that? Well, they do that by setting up procedures, policies, ways of making loans that are fair and consistent. And when those policies are consistently followed, there's a better chance that you're going to get treated fairly. Banks that have inadequate systems or very generic policies or just kind of, shooting from the hip, right? Yeah, we do banking with a smile and a handshake. Yeah, that's great for 1890, right? But this is a different world, and we can't operate that way anymore. So it's a matter of building a program to make sure that you're treating people fairly. Now, it sounds simple, but actually implementing it, that's where it becomes difficult.
Yeah, absolutely. And so what are some of the challenges that banks run into when trying to adhere to fair lending? Obviously there's been all types of regulation around it, but, even today here in 2022, Tory, what are some of the, top issues that you find banks run into that maybe they struggle with?
I guess the overall issue, I would think, and one of the reasons that drives a lender away from bank policy or that allows banks to make loans that they won't normally make is because they're trying to make money. And there's nothing wrong with that. Virtually every
Yeah.
organization needs to be profitable or you will not exist. Banks make money by taking in deposits from people who have excess and lending it out as loans. So people out, oh, the bank just wants to repossess my car. They want to repossess my home. That is never true. It is very expensive to do that. The bank wants to keep you in your home and you to keep making payments, right? So banks have these policies in order to do things fairly. Well, then a customer walks. Let's say the bank says you need to have a 600 credit score to qualify for a loan here. Well, my credit score is only 590, but I make good money and I've paid my bills. All right, well, we'll make you the loan. Oh, wait a second. We just went outside of policy, right? And that's where some of the risk comes in because you did that for one person. Are you going to do that for this person and this person? And a lot of times what happens is they will do that for white applicants and male applicants and not female applicants, minority applicants. And that's where the prohibited basis come into play to say, listen, you can't make loan decisions on this way. So it's when banks, when they get, I'm not going to say lazy, but when they branch out from what they normally do to try to make money, to try to bring in loans, right? You can't ever harp on a lender for doing their job. They're trying to make the bank money. But when you get outside of policy and you're doing it inconsistently, that's where banks get into trouble. So for the average consumer, I would say knowing your creditworthiness. What is your credit score? What's a loan to value ratio, right? The average consumer should know what that is. Yeah. If I want to buy a $10,000 car and I borrow $10,000, you take the loan amount, 10,000, divided by the value amount, 10,000, that's 100%. That is about the riskiest that you can be, 100% loan to value, because what happens if a bank has to repossess that car and now it's only worth 7,000? They sell it,
right,
and then they pay for the cost of selling it. They get $6,000 back. They just lost $4,000. But if I say, you know what, I'm going to put $3,000 down on that car, and now my loan to value is 70%, that's a lot less risk. I'm going to be more creditworthy. And a debt to income ratio is the same thing. What is your monthly debts divided by your monthly income? Right? It's not hard. If your debts are $1,000 a month, income's $4,000 a month, that's 25%. That's pretty good. But if your debt to income ratio starts getting over 40 and 45%, you may not be creditworthy. So it's the average consumer needs to understand these basics, so that way when they go to a bank, they're already armed with some of those details and knowing that, hey, I'm a creditworthy individual.
Yep, absolutely. No, that is a great summary kind of rundown, Tory, that I think everyone could take something away from. And yeah, you really touched on some really good points. And one of them I want to kind of expound on a little bit more is, the idea of, a banker developing policy, right? These policies. And I imagine that's what you're helping to educate them on, is how to properly develop these policies, these standards that don't alienate any of those classes that you mentioned, but also allows them to, still be able to make money, and kind of fulfill their mission as the bank. And I know that's a never-ending hard type balancing act that they have to do. So how do you and Tuscan Club help the banker develop those policies and develop that outlook to ensure that there's fairness all the way around?
Yeah, so we have two parts of our organization. We have Tuscan Club Consulting, and that's where we go out and do bank audits, right? So I literally just got done finishing a fair lending audit for an $800 million bank. I know you may, those of you listening may hear 800 million. You think, geez, that's huge. It's actually not. It's only 6 branches, right? Maybe 50, 60 employees. But it's an $800 million bank, and they have a presence in a couple metro areas. And when we do the auditing side of it, that's where we're reading policies, we're reading procedures, we're testing their program.
Oh man, I wonder, did I freeze up or did Tory freeze up? It may be on my end. Let's see, Tory, can you hear me?
I mean, I saw it cut out, and I was like, I'll just pause. I don't know
Yeah.
what's up with you. Anyway.
Yeah, I don't know. It may be on my end.
Yeah, well, you can blame me. That's okay. I want to keep your listeners,
That's
they can blame Tory. That's fine.
They know it could be. They know it's likely me.
All right. Well, one of the things I wanted to talk about was underwriting. And basically, if you don't know what underwriting is, it's simply the process of making a loan decision. Okay. So when I read a bank's underwriting criteria, one of the things I'm looking for, is it clear? Is it concise, right? If it says you need a 650 credit score to get this loan product, then that's easy. I can test against that. I can look at loan files and see, did you have a 650 credit score? If you say you need a 90% loan to value ratio or whatever the criteria is, if it's clear and well defined, I can test against that, right?
Yeah.
The worst thing you can see in an underwriting policy is good customer. What does a good customer mean? Does it mean that you don't have any late payments? Does it mean you don't have any late payments with us or with others? Does it mean you don't have anything bad on your credit bureau history? Does it mean that you've been a customer here for 6 months, a year, or 2 years? Like, what does it mean? And if you're going to have vague criteria like that, what happens? Lenders guess, and they do their best job of treating people fairly, but they're humans, they have biases, and they don't, which is probably one of the big issues with fair lending, is not having clear policies and then not implementing them. So, having great policies is awesome and it looks great, Ron, but if you don't follow those policies, what's the point?
Right.
So that's where we review the program and then we test the program to make sure it's actually functioning the way it should be.
Yeah, absolutely. And for someone that, I wasn't on the compliance side of the bank. I was on the sales side and kind of branch administration. So I remember, often having to provide either reporting or some insight on our loan portfolio and maybe sometimes even fill in some gaps when we're being audited. And, it was always interesting, to learn kind of, where our bank, was situated with that and helping to provide that clarity and then getting that feedback from folks like yourself and your team, to help us be a little bit better if we had any areas or any gaps. So I think that's, very, it's a very interesting, but I think it's something that's not talked about much in this country is fair lending. I don't know your thoughts on that, but.
Well, here's the deal. I'm going to say something that everybody knows.
No.
So if you don't know, welcome to 2022. Discrimination is as old as this country. Well, it's much older than this country, but this country was literally founded on discriminatory principles, right? There are certain classes of people that for not decades, but centuries have been shielded from the banking industry. What I want listeners to realize is buying a home, let me rephrase that, the ability and the option to buy a home is the best way, almost without winning the lottery is great and having rich relatives is great too. But buying a home is one of the best ways to build wealth. And it's one of the best ways to build generational wealth. And for years and years and years, certain people have not been allowed access to the credit industry. They haven't been able to buy a home. So generational poverty continues to be an issue in so many communities in this country, neighborhoods where lenders, there's a term called redlining, right? And it's basically, I always, when I think of redlining, I think of like a 1930s fat cat New York banker with, a suit and a cigar and a monocle, and he draws a red line around a minority neighborhood and says, we're not going to make loans here. See, that's my best New York accent. That's terrible. I'm sorry. Anyway, New York, I apologize.
Close. Yeah.
They would draw. Yeah, thank you. They would draw a red circle on a map of a minority neighborhood and say, we're not going to make loans there. Well, if people are not allowed to buy a home, pay off a home, transfer that wealth to their kids, how is that community going to prosper? Right? And these are a lot of the principles that we talk about in the book. The book is very much a way of addressing specifically in the lending industry. I mean, there are lots of other fields that discrimination has been long studied. Home ownership is one, in the workplace, but in banking been addressed before. And that's when I met this random guy in Florida who happens to live 3 miles from me. When I met him and he said, you need to write a book on this, that's when I started putting this all together and thought, geez, nobody's ever written a book on this topic. And I think it's important. I think we need to start talking about it because the problem's not going to go away on its own. And I think it's going to take a big push from a lot of people to force banks to start building compliance programs. And here's another thing, Ron. A lot of the average person thinks, the banking industry is highly regulated, and it is. But I can tell you a lot of institutions, and I've been a part of 288. I keep track on my wall. Yes, I write on my wall. It's one of those sketch pads you can write on and erase.
Yeah.
I've been a part of 288 exam and audit projects at this point. And I can tell you that most institutions have never had a legit fair lending audit.
Wow.
So if you think that your bank or your credit union, your lender has it all together, I will tell you a lot of them are good at it. But a lot of them are not, and a lot of them have weak programs and they don't know it.
Wow. That's unbelievable that in 2022, one, just the fact that discrimination in the credit and lending space can still exist, but then, that there are banks that maybe either don't take it as seriously as they should, or they've never really had a true blue legitimate audit to really assess the accuracy and the impact that their policies are having on them and on their community. Yeah, that's mind blowing, man. That's unbelievable.
Well, and it's not all doom and gloom. I will tell you that probably 95% or more of the banks that I've partnered with and that I've audited, when I have found really bad fair lending findings, they have been, Tory, thank you. Let's get this fixed. Let's address this. Let's do what we need to do. So for the most part, when they are educated, they want to do it right. It's very rare where a bank is just like, thanks for the info. We're not going to do that. Unfortunately, I've just experienced that recently, and that's 1 out of 20. But yeah, usually banks want to do it right, but that's the problem is a lot of them have no idea what to do. And I chalk that up to a lack of education, because I will tell you that most lenders want to do things right and they don't want to discriminate. But their programs, the way that they're set up, are set up to allow discrimination. Yeah. And as things get applied, certain classes of people are still getting a disparate impact and still suffering, and it will continue until we are all educated and build programs free of it. And discrimination is always going to be there. People are going to always have predetermined biases, and if they're set out to do something, they're going to do it, right? But there are so many ways that we can prevent it generally from happening. And the banking industry, this should not be a hard problem to solve because it is so highly regulated.
Yeah. Yep, that's true. Yep, that is true. Tory Haggerty is our guest today with Tuscan Club Consulting, Tuscan Club University. And he's got a new book coming out, Unfair Lending, that we're going to talk about here as well on the Minding Your Business podcast. So, you go around, Tory, and, you have a great presence, you and your company, at various trade show events and trade association events in the banking industry. I used to get this question a lot. I don't know if you do. How do you get in with bankers? I'd love to be able to do business with them, but it's hard to get in with them. There's a lot of gatekeepers. What do you find attending a lot of those trade association events, very beneficial to connecting with bankers?
So somebody mentioned this to me before I started. They said the banking industry is very hard to crack into, and they were right. But once you get your foot in the door and once you do a couple jobs for people, if you're good at what you do and you add value, the good thing is it's hard to get your foot in the door. But once you do, a lot of them, they all know each other and they talk. So once you've established that, that's the best way to, get your foot in the door. And, people always ask, well, what do you charge? Well, you don't want to do a really cheap rate to get your foot in the door, because then it's hard to raise that rate later. But you got to do what you got to do. So one of the things I did was I did a lot of speaking engagements. So I do compliance. I would go and find compliance groups in different communities. And one of the first ones I ever did was in a small Minnesota community. I drove 3 hours. I did 1 hour training. And now 4.5 years later, I've partnered with almost 8 banks in that area. So, I mean, that was one of the things. But going to the trade shows, I've had someone that's been in this over 25 years. They said, don't ever waste your money on getting a booth at a trade show. The very first trade show I went to, we signed 2 clients who 4 years are still with us. Another trade show I went to, we ended up signing 8 or 9 clients from that. Now, that was luck, right? There was a person in that area who was servicing a lot of banks who was leaving the industry. So they were all looking for a replacement. I contacted her. She said, yeah, I'll share your information. And 8 of her former clients signed on with us. But if I would not have been at that trade show, if I would have not made that connection, then I never would have had that opportunity. And we've gained so much business from that. And like I said, then they start talking. But, if you're adding value and you're chance, right? You need an opportunity. But once you get in, you get the foot in the door and provide that value, they start talking. And that's one of the good things about the banking industry is they do talk a lot.
Yeah, that's extremely true. I couldn't have said that better myself, man. That's extremely true. That it is difficult to get in with the bankers, but I always found benefit in attending the trade shows when I worked with, whether I was with the bank or I worked with, companies that provided services to the bank. And then now with me kind of being somewhat kind of still in the industry and in the CDFI space, but definitely very connected, I still find value in attending those whenever I can. It's great connection. And for us, many of the banks provide a source of funding for us through their CRA umbrella that allows us to carry out our mission, which also directly helps them with a lot of times with fair lending, because in some cases they're able to provide us funding, and we're able to do a loan pool or a loan transaction where they could actually buy some of the loans that we underwrite, which is all in kind of these underserved areas, and allows them to get involved that way. So we serve as a nice channel with what we do at River City Capital, but it's all tied to, we exist because of fair lending, quite frankly, our organization. And so, that's really tremendous to see how everything ties together. With the book, where can we find the book, Tory?
Website tcuniversity.us. We actually have several hundred copies here that, now this is a hard copy, they're soft cover books, but we ordered a few hard copies. But everyone that's ordered on our website, I've autographed each one. I would love to tell you that drastically increases the value of the book. But I'm not going to lie to you. But I've got a few autographed books, and I treasure those. It's great to have a signature from the author. But yeah, if you order from our website, tcuniversity.us, all of those books that we do hand sign, and we ship those out from home here. But yeah, I always wondered why people would spend the time to write a book. And honestly, there's an old saying that you don't really know something, you don't really truly learn and master something until you teach it, right?
Right.
Once you're able to teach it and stand up to scrutiny of questions and pressure and, defending your position, and you do that more and more and you get better at it. But as you teach, you learn as well, and you learn new things. I mean, I've learned a lot, especially since I wrote the Fair Lending School 2 to 2.5 years ago. And I've learned a lot even since I wrote the book, which just got published on June 1st. Granted, we started writing it back in November, but yeah, it's kind of one of those things where it's just kind of crazy, writing the book actually wasn't difficult for me. Honestly, it probably took about 8 or 10 hours to actually write the book. But that's because I spent a year creating the manual, and I took the best stories and the best content from the manual and I recreated in the book. So that process was pretty quick, but the editing process and that was definitely a lot harder.
Yeah. Yeah, absolutely. So I am going to NYB community. I'm going to pick up a copy of the book. I'm going to do that. Well, we're recording this on June the 9th. So I'm going to pick up a copy today. I encourage you, and the link's in the show notes, but I encourage you to go to tcuniversity.us, tcuniversity.us. Pick up a copy of the book. It's also on Amazon as well, but I like to order direct. So go to the website, tcuniversity.us. It's in the show notes. Pick up a copy, and then let Tory and I know. If you pick up a copy, shoot us a line, or either one of us, or shoot me a line and let me know that you picked one up. I'd like to shout you out and that sort of thing for doing so. And then when you do pick up the book, read it. That's the other thing. Pick up the book and actually read it. And you may even have some questions or some thoughts that you may want to share. And I encourage you to do just that.
Well, here's
ahead,
one thing. Here's one thing I want to share, Ron. And this isn't a plug for the book. Honestly, a book like this, the author, we don't make money on this. The between editing and everything, the hundreds of hours I got into it, the book is there for the message, right? If you order it from us, yeah, we get a little bit bigger of the cut, and we'll send you a signed copy. But what I want to talk about in this book, unfair lending in banking, you may think, oh my gosh, that is probably the most boring thing ever. And you would be somewhat right. I do get that. But I want to tell you a little bit about the way I tell stories and the way I write. When I was in college, Ron, I took, so I told you I went to business school. I took Accounting 101. And they talk about things like accounts payable, accounts receivable, net income, blah, 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 all this boring things that you would think, oh my gosh, this is just terrible. However, our instructor was a 30-year CPA who owned his own firm. And he would teach us things about depreciation, boring topics. But then he would tell us a crazy story of some client who took this concept to the extreme. And it was the best course I ever took, and I absolutely loved it. He told it through real-world storytelling. So in my book, when I talk about steering risk and you're thinking, oh my gosh, shoot me, this is terrible, we have real-world stories of actual banks that have screwed up. And I'm not saying that humans like to look at a car wreck as you're driving by, but you all know we turn our heads and look, right? So there are real-world stories that we've had a lot of people read it now. They're actually interesting. And so, yeah, it's a dry topic, but I do feel that the book is at least entertaining. I think it'll keep you engaged, and I think you're going to take a lot from it. So it's not boring theory. It's actual practice of actual banks that screwed up. Now, I will tell you, for the most part, the offending parties have been kept anonymous. One name might slip out in there, and if you read the book, you'll find out who that is. But we hide the identities of the offenders. But yeah, they're all real world stories. They're actually things that happen. So, and a lot of them aren't very favorable, but it's eye opening. It really is.
Yeah, no, absolutely it is. And I encourage everybody to pick that up. Definitely, one, to show support, and then two, to get the education. Because I think, just everyday consumers need to have, one, a little more awareness of what fair lending is. And then two, another big piece, and you touched on this a little bit, Tory, which I want to share with the audience is, to hold your bank accountable to fair lending. If you get the wind of legitimate issues, with your bank or whatnot, you need to seriously, challenge that and hold them accountable, and ask your banker about their fair lending policy. What are you doing to ensure that you're providing credit in a fair, consistently fair manner? Challenge your banker with that. Don't just make deposit. You're putting all your good money into the bank, and you're supporting them as a customer. And many of you have for many years and decades. But many people, I don't think, hold their bank accountable to anything other than having a branch open and the ATM and having a smiling face behind teller's row. But having the online banking system up. But other than that, there's not a ton of accountability. So I just want to encourage everybody to do that.
Well, how is the average consumer supposed to know if you're treated fairly or not if you don't understand how the system works?
Yeah.
I mean, that's a question right there. How do I know as a consumer if I go to a bank and they make a loan decision and it's unfavorable, or they make me the loan and it's a 20% interest rate? How do I know if I'm being treated fairly? If I have a 450 credit score, I'm thanking them for making me a loan, because that's probably not a good idea. That's a very low credit score. If you have that credit score, that shows a history of not handling credit the way that you should be. But if you have a 680 credit score, what does that mean? Is that good? Is that bad? Well, it's kind of average, right? But then knowing your creditworthiness, like I said, and being armed with this information, if you've been denied for a loan and you have no idea how the credit system works and you have no idea how they even evaluated you, then it's hard to know if you were discriminated against, right? So it's educating yourself and others. I mean, these are all simple concepts. None of it is, rocket science in here. It's simple concepts, but most people, they're never, and it's not because it's just, we're not taught this stuff, right? How many decades have we said, why are we learning, the Pythagorean theorem in school, how to, what is the quadratic equation? How about you teach me, instead of the atomic weight of boron, how about you teach me, what insurance means and how to get a loan, right? And it's
absolutely, that's a fact.
Teach us. So you got to go out of your way in order to get that type of education.
Yeah, absolutely. Tory, with Tuscan Club, what do you see on the horizon for you guys? What's next? Obviously, none of us have a crystal ball, but what are you kind of seeing, for you guys next, and different ways that you can kind of serve, this industry? So
that's a great question. Thank you for asking that, Ron, because in the book, right at the beginning, I talk about a BHAG. If you don't know what a BHAG is, Jim Collins, a famous author, wrote a book a long time ago called Good to Great. Any business owner, I recommend that you read it. Okay. Yeah. But a BHAG is a big, hairy, audacious goal. It's like something that you're just almost idiotic for taking on, but man, do it, grab it by the horns and see what happens. Challenge yourself. And we have created a BHAG at Tuscan Club and Tuscan Club University, which is the education portion of our business, that our goal is to end discrimination in the banking industry. Now, I get it. What is some, 40-year-old white guy in the middle of, South Dakota gonna do in a multi-trillion-dollar industry of a problem that's been around for 250 plus years? That's why I consider it a BHAG. It's a big, hairy, audacious goal. But that's our mission, is to educate and get out there and stand on those big stages and speak to the average consumer and speak to bankers and continue to train and push our message of here is how you build a compliant program. Right? When we started 4.5 years ago, I was just sitting in this office and, I didn't have a single client lined up. And the first the first audit I ever did was actually scheduled for fair lending audit. And then I had another fair lending. I said, why is everyone coming to me for fair lending audits? Well, the problem is nobody else does fair lending audits. They don't know what to do, or they don't want to take on the liability. And that's silly. I'm like, why? What liability? I'm going to try to help you get a better fair lending program. Right. So that's the future of us. We want to grow. We want to educate. We want to try to end this problem, because our country will prosper when everybody has access to the credit industry. And by everybody, I mean everybody that's creditworthy, right? If you have a neighbor or a coworker or somebody that's not paying their bills, I don't care what their race, ethnicity is. If you're not creditworthy, that's not a right. Being a responsible creditworthy person, everybody should be able to get credit, right? If you if you have income, if you pay your debts, if you're responsible, I want you to be able to get a loan. And therein lies the problem, is so many people that are creditworthy are not allowed to buy a home because of the color of their skin. And that's what we're trying to solve.
Yep, absolutely. Amen, man. And so, we're both in that space, and that's a fight that, we're going to continue to beat the drum on. And I think, we're going to get there one day for sure, where, there's not going to be discrimination in the space. And again, like you say, our organization exists because of that. That very mission is to work with the banking industry to, provide an additional channel for them to help ensure that they're avoiding discrimination by us being in a lot of those disinvested areas, areas with people of color, and whatnot, that we're able to provide that level of funding to be able to do that. And
there's a lot of those issues. There's a lot of those areas too, Ron, which as well, that don't have access to banking, and that's one of the big problems too. So part of redlining is where an institution places their branches, and they strategically place their branches around and outside of low and moderate income or high minority areas, so that they don't do business and lend with those communities. Right? Sometime grab your, go to your institution's website and look at where their branch locations are on a map. Right? I took a sociology 100 course in college. Actually, I minored in sociology, but one of the things they taught us was, the downtown part of most major cities, the few blocks from out that is usually the higher minority areas, right? And that's where banks will stay away from. Some will, and they're getting way out to the suburbs where, it's just out in suburbia. It's mostly higher income individuals, and they do that on, well, I'd like to think they don't do it on purpose, but I think a lot of times they do. And how do you get a loan when there's no bank within 25, 30 minutes of you? Now, I understand online makes it a lot easier now, but building those banking relationships, there are institutions out there that strategically place their branches that way. And there have been a lot of redlining cases lately, specifically focusing on branch placement and focusing on the rate that they're taking applications from minority applicants. There are some banks that what they do is they collect all this data. It's the Home Mortgage Disclosure Act. They collect all this data on all these home loans, right? So when you apply for a loan, now that they can't discriminate based on race and sex and ethnicity. But then when you get a home loan, they're going to ask you, what's your race, what's your sex, what's your ethnicity? Fill that out. Do that. That gets reported to the federal government, and then they use that data to see if banks are making loans to all races, all genders, all ethnicities. And they test. And what they have found is some lenders, they have peer lenders, which are just other banks and credit unions making loans in the same community, that will make 4 and 5 times more loans to minority borrowers than that bank that they're reviewing. And they'll take 5 times fewer applications too. Well, if you're not taking applications from minority individuals, how are you going to make them a loan?
Right.
But fill that information out. I know it's counterintuitive. You're like, I'm not going to give you that. You're going to use it to discriminate against me. It's actually the opposite. They have to report that. It has to be accurate, and they have to record what you write, and that gets audited, and examiners look at it, and then they use it to do fair lending analysis. And if you don't fill that out, then you are not providing a clear picture of how your institution is lending.
Yep, absolutely. And that's a tremendous point, Tory, that you just made that I really want people to take away from, is to fill out that information when you're doing lending, any kind of lending that you're engaged in, where you're provided that as a survey or a questionnaire. Fill that out. If you're buying a home, as Tory mentioned, and you're getting a mortgage, fill that information out, because it is extremely helpful from the accountability standpoint. As it was mentioned. And, something else, Tory, that you touched on with the branches that is always intriguing for me is that even when some banks do put a branch in a low to moderate income or disinvested community, the services vary, right? The branch in that low to moderate income area closes before they know everybody's getting off from work, right? So they know everybody gets off of work at 5 o'clock, but then they close the branch at 4:30. Right. Whereas the suburban bank stays open till 6. The ATM's always broken at the one at the, it's like the ice cream machine at McDonald's, the thing's always, jacked up. And so it's holding them accountable for, those pieces as well. Like, even when you do have services in these areas, make them comparable, right, to what you find in other more, higher net worth areas.
I would even disagree with that. I wouldn't say make them comparable. Go the extra mile to make sure that those people have access to credit. Okay.
Absolutely.
There's an old misnomer that you can't discriminate against a man or against a white person. You can. There's no protected class in banking. It's prohibited basis. The prohibited basis is race. Right. We all have a race. We all have a set. I don't want to get too deep into that. I know gender, all that stuff. That's not the point here. The point is we white men, they've never had problems getting access to credit. People in rich neighborhoods, they're not having any problems getting loans. It's people, as you mentioned, in disadvantaged neighborhoods. So I would, and not to disagree with you, but I would say go a
But
step
yeah,
further. Stay open later. Stay open if your rich neighborhoods are open till 6. Stay open till 6:30. Stay open till 7. You know, if you're in a Hispanic community, you better have at least 1 or 2 Hispanic speaking people in your bank, right? You
facts.
better go that extra mile in order to meet the credit needs of that community. Make sure not only that you have all your banking products, make sure you have home loan lenders there, make sure you have auto loan lenders there. I would say you need to go the extra mile, because that's the thing. Nobody is worrying about rich people. I mean, they're the ones that least need money, right? So I would say go the extra mile and make sure that you're getting access to that credit. And honestly, I think if a bank opens a branch in a minority neighborhood, in a lower moderate income neighborhood, in a disadvantaged neighborhood, and their banking hours are crap and there are hardly any staff there, they're doing it just to show that they're trying to serve the community, and they're really not.
Yeah, absolutely. So one, you're exactly right. I agree, I actually agree with you that going the extra mile and being very intentional about going into these communities and providing an exceptional level of service, whether from the cleanliness of the facility to the knowledge and friendliness of the staff,
Absolutely.
to working technology. All those things need to be top notch and exceed expectations. And banks, I think that have that ingrained as part of their culture, don't have issues with fair lending. And they find that when you talked earlier about the economics of it, the ability for them to make money, I believe they also find that they make more money, right? Because they're not getting into fines, they're not getting into all these other issues, and they're building relationships with people that are long lasting. And I think they learned that.
I just heard recently that I don't quote me on the numbers, and I can't cite a source here, but it was from a person at the DOJ that had mentioned that the minority community's lending power and borrowing power is a multi-trillion-dollar industry, that a good chunk of it is not being met. And there is an organization, there is a bank that got hit with major redlining and fair lending issues about 15 years ago. They did the right thing. They said, we screwed up. Here's what we're going to do. And they started penetrating this community and doing outreach and lending money. And you know what happened to their profits? Through the roof. Communities prosper. Everybody prospers, right? So it's one of those things where, they should be doing it for the right reasons, but the bank is going to benefit. I guarantee the bank is going to benefit. The credit union, whatever's lender is going to benefit, because there are credit-worthy people everywhere. But a lot of them are not getting access to credit. And that's the problem that we need to solve.
Yeah, absolutely. No, amen to that. Most definitely. In terms, from getting back a little bit to Tuscan Club, when you make hires, right? And this is something I think many people are interested. People that obviously have a consulting business. What goes into for you as you make a decision to hire within your organization?
You mean hire an employee or bring on a new client?
Yeah, hire an employee. So when you hire an employee, what do you look for most? What skill set or what type of personality do you look for, and at what point do you make the decision to do so? Whether when that's a need.
So first of all, I want somebody obviously with a good compliance knowledge. I don't have the time as a small business owner with 5 employees. I don't have the time to be training someone up from scratch. So I look for a good compliance knowledge, but there's really one thing that I really care most about. Examiners, so bank examiners, which I was, and auditors, which I used to do in the banking industry. And you could argue I do that now, but we call ourselves consultants, not auditors, whatever, splitting hairs. We're doing audits.
Right.
A lot of them have gotten a bad name in this industry for a gotcha mentality. Okay. There are lots of things. There are literally thousands of pages of regulations that a bank has to follow. And I'm the one that gets to look and read the disclosures and see if the bank did their job. And when I found that they didn't, gotcha, banker, here we go. Here's a violation. Here's a finding. Here's a violation. It's people with gotcha mentalities that I don't want working for my organization. We are looking for people who like to identify risk, solve problems, and move on with life. Hey, you have some issues at your organization. You have some redlining issues. There are parts of your community you are not penetrating, but I got some solutions for you. Look at some marketing strategies here. Look at getting some community outreach here. Solve problems, provide value, right? Solve those problems. And I want my people, and that's how we always operate. We are not gotcha people. We do not get paid by the violation, and neither do examiners, even though some bankers listening may not agree with that, or they may not think that. But it's being collaborative, right? If you're a consultant or you own a consulting company and you're not there to solve your client's problems, then you're in the wrong industry. Go become a federal inspector if you want to write people up for a living and feel good about it. We never feel good about identifying risk. And there's some times where I have pages long of findings and I'm just like, listen, I'm sorry, I apologize in advance. And they're like, no, we want you to find these issues so that we can correct them, so that when the examiners come in and we get our exam, we're not going to have that risk. And that's the mentality that they should have. So when it comes to deciding whether to pull that trigger, I have found that, or what I've heard is, the first 10 employees, roughly, every single one of them is a big decision. It's a big financial commitment. Once you get over 10 employees, it's a little bit easier to make that decision and pull the trigger and say, okay, I'm going to hire another employee. I'll tell you what, though, the first employee I hired, who's still with me more than 3 years later, it was a big decision, and I had to have enough work for him to do and for me to do. Well, we schedule our audits out months in advance. I mean, my schedule is filled through December, right?
Yeah.
So I can't commit to more audits this year without having an employee. If I don't hire that employee, then all of a sudden I got work that I can't do. So my recommendation and my thing is run your business the same way you should be running your household. Saving cash, building wealth, saving capital, so that way you can absorb that extra payroll for weeks or months until they start producing you income, right? And then keeping them busy until you can fill their schedule.
Yep. Nope. Love that. Could have said that better. That's great insight and great wisdom, quite frankly, Tory. And that kind of spans, the consulting business. I mean, that's business in general, right?
Absolutely.
And so that's tremendous. As we get to, close to kind of wrapping this up, man, because this has been just loaded in just a wealth of value, Tory. Family. What does family mean for you, and how has family been supportive of you, in your business as you've continued to grow and continue to progress in the industry?
That's a tough question, because I'm a stepdad. I don't have biological kids, which, it's a tough position. Any of you that are step parents, you get, all of the financial responsibility and half of the love and none of the credit. It's kind of what it feels like a lot of times. But, my kids have been great, and my wife has been so supportive. And I'll tell you what, though, and this isn't a bad thing, but I had this idea, 8 years ago when we met and got married. And I'm like, hey, we should do this. We should do this. And she's worried and whatnot. And every right she should be. And it probably took a good 3 years before I finally convinced her, listen, I can do this. I can make it happen. And when she was all in, she said, all right, let's do it. Let's follow these steps. Let's do this. And she believed in me. And that was really the biggest thing, because if she didn't believe in me, then I'm not going to believe in myself. And she's just like, Tory, I know you know your stuff. I know that you work hard, and I know that you care. And I'll tell you what, anyone that's started a new business will know this, and anyone who's thinking about it, this sucks, but it's true. There's no better motivation than to go out and make your business to succeed than the threat of not making your mortgage payment or getting your electricity turned off. You know what I mean? Yeah. So while that sucks going through that, it's one of the best motivators. And, having that family support, it means everything. If people don't believe in you, I have a close family member, and I won't say who it is. That's fine. But I have a close family member that I told this person my business idea, and he said, that's a bad idea. You'll never make as much as you would at a banker, and you're going to take all this risk. And that delayed me for 2 years before I finally shook that off. And I said, you know what? I'm going to do this. So, man, if you got the naysayers out there, don't blindly jump into something, but, do your homework, do your due diligence. And, I worked for several months building my website, getting everything ready to go before I finally launched my business. I had money set up for cash ready to go. I had a borrowing line of credit that I set up ready to go. Obviously I know the banking industry. I set all that stuff up, but eventually you just got to jump into it. People at the end of their lives, they don't talk about the things they did. It's the things they didn't do that they regret. And
right.
I always knew that if I went the rest of my life and I never took the sleep, I would always regret it. And I wasn't going to be one of those statistics. So.
Yeah, absolutely. I used to go into a lot of senior homes. But one of my former organizations, where we spent a lot of time working with seniors, I would go into a lot of senior facilities. And what you just said is so spot on, Tory. I would sit down. Yeah, they always would tell me about the regrets. Like, I wish I had been like you, Ron. I had done this, or I wish I had done this, or my wife and I really wanted to do this. We never did it. With my kids, with this, it was always loaded with this regret, right? And these are people that are, most of them were in their 80s and 90s, and they would just sit there and they would just go through it, and you could see in their eyes, right, just kind of the hurt and pain of knowing that they're on.
It's too late.
The other side of life, right? And so, man, that always was a motivating factor to me, is that they'd say, "Man, listen, you do it." You know what I mean? Like,
another great motivating factor for me is I worked for 3 different banks, and I didn't like it. I wasn't a banker. I didn't like the bureaucracy. I didn't like the hierarchy, and that's coming from a 20-year military veteran where that's all it is. But anyway, I didn't like working for a bank. So you know what, Ron? One of the biggest motivating factors for me is if my business fails, all my experiences in banking. So what does that mean? I need to go back and work for a bank.
Back to a bank.
That's not going to happen. That was another big motivating factor to say, because if you work, whatever industry you're in, if that's what you've done your whole life, and you've spent all that time gaining that knowledge, and you start your own business, that should be a good fear factor for you. If this fails, I got to go back and work for somebody else. That was another big push, man. I spent a lot of sleepless nights this first couple months before some clients started coming in, but that was always my thing. That's what got me up in the morning and got me hustling every day, knowing that I do not want to go back and work for a bank. And I love the banking industry. I really do. It's just not for me. I'm just not a banker. And there's nothing wrong with that.
No, there's nothing wrong with that at all, because now you're on the side where you're able to serve the industry, and you're on the side that serves the industry and that serves people, right? Yeah. And so there's definitely something for that. Tory, man, listen, I can't thank you enough for this, man. You've been tremendously gracious, just throughout this whole process of setting this up, with what you do. I admire what you and your team do. To really help move the needle and really, showcase that, discrimination is something that we all need to be cognizant of and help eradicate. And in the way that we could do that in an industry that's so impactful, the banking industry, which has its tentacles in basically everything in this country, right? It's very important. And so I commend you, brother. I appreciate what you guys are doing, and look forward to continuing to being a support and sharing with people that, fair lending is something. It's not a pipe dream. It's something that, can be achieved. And if we work with our banking brothers and sisters to help achieve that, it just makes the entire society that much better. So thank you so much, man.
Thank you for saying that, Ron. It's not a pipe dream. It can happen. It's an educational problem. We need to get educated to fix it. So educate yourselves, learn this stuff. I promise. I love it. That's the way I want it. It's not a pipe dream. It's not a BHAG. It can happen. But we all need to.
Absolutely.
It's a pleasure being here, Ron. Thank you so much. I greatly appreciate it as well.
Yep. Excellent. So Tory Haggerty, our guest today, founder and president of Tuscan Club Consulting and Tuscan Club University. Make sure a few things again. Make sure you go to the website, tcuniversity.us. Make sure you do that. Do that right now. As you're listening, check out the website, get educated, sign up for the newsletter. there at the site. Make sure you do that so you can continue to, that automates the process for you to get and stay informed, right? We talked about education. Part of education is you got to remain informed. This is a very dynamic industry. There's changes that come all the time, MYB community, and you want to stay on top of that. And Tory and his team do that through the various newsletters and communications. So make sure you sign up for those, and then pick up the book Unfair Lending at the website too. So he's made it very easy for all of us to do that. I'm going to do that in leadership, and you'll see me post. If you go to my social media, I'll be posting when I receive my book. Hopefully it's got Tory's signature in there, and he becomes the big thing, and I could maybe do an NFT or something like that. Get with Tory, do an NFT and make a bag of money.
If you make money on that run, I will drive down and we will meet, and you're going to take me out for a steak. How about that?
Yeah, hey, there you go. All day long. At my own steak place, by the way.
There you go. Absolutely.
Oh, I forgot one other thing I want to ask you, man. When we talked in South Dakota back in 2019 in the good old days, you mentioned about kind of a personal kind of deal of going around to the different baseball stadiums, right? I never forgot that. I thought that was really cool of kind of, to be able to go and watch a ball game in every Major League Baseball stadium across the country. Obviously, COVID's been an impact to that. Is that something you're still looking to do?
So actually 2015, so there are 30 ballparks, there are 30 major league teams. In 2015, I was at number 29. St. Louis was number 29. I only had one left, and that was San Diego. I'm a big baseball fan, which is why I wanted to get into broadcasting and went to school for that. But I love baseball. But then I stopped. San Diego was my last one. I didn't want to do it because I didn't want it to be over with. So I waited and I waited and I waited. And finally, right around New Year's Eve this year, we decided, my wife and I, we're going to fly to San Diego. And I have a lot of aunts in LA. We're going to fly to San Diego. Yeah. We're going to go to the Padres opening weekend.
Yeah.
And then the most major league thing ever happens. They go on strike. The baseball season gets delayed a week, and the Padres are not home when we get there.
Oh, so my goodness.
Honestly, that's just so I've gotten all 30 of. We did a ballpark tour, and that's fine. I got to see the ballpark. I got to experience it. I got to go in the dugout and go on the field and stuff. So it was cool.
Yeah.
But yeah, what poetic justice in the baseball industry. The most Major League Baseball thing happens at the end of that 30 ballparks. They go on strike, and I miss a game.
They go on strike. Oh, my goodness.
But yeah,
man.
For those of you that are wondering, Fenway is the best of the old parks. It's the most beautiful. Pittsburgh Pirates is my favorite of the new parks. It is beautiful with the three rivers and bridges. Yes, my gosh, go to Pittsburgh. It is lovely. White Sox is the worst, but I'm a lifelong Twins fan, and I hate the White Sox, and the stadium is ugly, so just don't go to the White Sox. So. Right. I know I just alienated some fans, but whatever. I'm a lifelong.
Everybody in South Chicago.
Sorry, I'm a Twins fan. Give me a break. The Twins never win anything.
Right. Yeah. Oh, yeah. Absolutely. No, man, that's awesome. I thought about that. I was intending to ask you, man, and it slipped my mind to right at the end. So I'm glad I caught you with that. That's
great timing because I just crossed off number 32 months ago. So it was great timing on the question. But
yep, awesome. So now there's got to be something else to fill it. Now that you've done that, you got to go to some more stadiums.
Maybe I can write a book about that. I don't know. I need to take a little break though.
There you go.
Time off. Maybe go to a ballpark again.
There you go. Yeah, you just started all over.
There you go.
Tory Haggerty, again, our guest today. Just tremendous. Someone I want to have you back. To kind of catch us up on kind of what you guys are doing, share with the audience that, and some more things, more topics around fair lending and things of that nature. We want to do that, Tory. So I'll have you back at some point here in the near future.
Yeah, let's wait a little bit of time and let's see what happens with the book, and hopefully people read it and gain from it, and we get some feedback, and then we can go through some lessons learned. I'd love to do that.
Yep, that'd be awesome, man. Thank you again, Tory, for being a tremendous guest here today. We're going to get out of here. This is episode number 293 of the Minding Your Business podcast. Check the show notes, connect with me. If you want to give me a call, you could do so on the OWL app. The link is right there in the show notes. The OWL app, actually a new business that just launched. Shout out to Jason Hill and that whole team down in South Florida. A great way to connect with consultants. Tory, you might actually like this app. I'm about to send it over to you. It's a great way for consultants to connect with people who are needing advice. So advice seekers can connect with advice givers, right? And advice givers, you can make money by doing that and having those conversations. So it's a really good app, just launched. One of the few apps to launch here in this recent year here in 2022. And I found it to be very valuable. So check that out. It's in the show notes. All right. 3 things that unite us. No matter where you come from, no matter what side of the fence, what side of the water that you come from, there are 3 things that unite us all. We all want to be a little bit better for ourselves, a little bit better for our families, and a little bit better for our communities. And if we could keep those things in mind with everybody that we come in contact with, even in these crazy Twitter-driven rant times, if we could remember those 3 things with everybody that we come in contact with, we'll all collectively make this place just a little bit better. Ron Brooks, the Minding Your Business podcast. I'll catch you on the next episode. Go be great.